Trading forex, would never need no record deal. Making my own investment, market printing me money.
Peace, guys. Welcome back to Zen's FX Hub, where fundamentals is simplified. And in this video, I'm going to talk about the weekly macro breakdown for the US, Canada, and Eurozone. All right, we're going to discuss labor, we're going to discuss inflation, and we're going to discuss policy expectations. Okay, so let's get right into it. The only questions markets care about is whether or not inflation is cooling fast enough for policies to shift, right? So if it's cooling, is it elevating? And how is this going to affect or influence central banks to make their rate decisions going down the line? Okay, so this is what, we're going to discuss later on. So far this week for the US, right, the data we got is manufacturing PMI, services PMI, JOLTS job openings, ADP employment change, and unemployment claims. Okay, if you don't know what any of this stuff mean, you can go to my YouTube channel, click on playlist, and on playlist you'll see, I actually pull it up so you guys can see. When you click on playlist, right, you'll see fundamental simplified, and right here you can find everything that I explained with all these news releases that come out every single month. I explain it in simple terms for you to be able to digest it, and I also give you examples. Okay, so go check that out. All right, so manufacturing PMI, right, when that number comes out above 50, it's considered great. If it comes out below 50, it's not so good, right? So manufacturing PMI was forecasted 48.3, but came out 47.9, so not so great. Services PMI 52.2 forecasted, but actually came out 54.4. Great. JOLTS job openings, right, forecasted to come out 7.61 million, but ended up coming out 7.15 million. Not so great. ADP employment change was forecasted at 49,000, but came out at 41,000. Okay, so you can say, like, it's kind of cooling in a sense, right? It's not really off that big of a number, but it's still cooling, right? Unemployment claims today came out forecasted at 213,000, but came out 208,000. Again, not too far off, but shows that, not a lot of people filed for unemployment. Okay, so this is what we got so far, and stick with me to the end of the video because I'm going to piece it all together for you guys. All right. Why does U.S. labor matters? Okay, a strong labor market equals higher wages, inflation risk, and no cuts. If the labor market stays hot, the Fed cannot cut. They need weaker hiring, slower wage growth, and less worker leverage. And for those who do not understand this, I got you. Go back to my YouTube channel and you click on this video right here, 2026 Economic Outlook. I break all this down for you guys in simple terms, and I even give you scenarios of how we may move forward this year for the U.S. Okay, so go check out that video. I promise you it's worth it. Okay. And this slide right here will make sense if you go watch that video. All right. So what's still to come for the U.S., right? We have NFP coming out tomorrow, unemployment claims, average hourly earnings, and we have the University of Michigan consumer sentiment and the University of Michigan inflation expectations. So job wages and sentiment altogether tells us whether the economy is cooling or slowing down, which again will determine how the Fed will maneuver moving forward. Okay. So for Canada, right? Canada, so far we got this week, we got IV PMI. Again, if the number is above 50, great. Below, not so great. So forecasted 49.5, came out 51.9. Great. Okay. And what's coming tomorrow on Friday, we have unemployment change and we have the unemployment rate. So depending on how that number comes out, will determine how we're moving forward with Canada. Okay. Eurozone, right? So far we got core CPI, we got CPI flash estimate, we got PPI month over month, and we got the unemployment rate. So forecasted 2.4, came out 2.3%. For flash estimate, there was no change. It stayed at 2%. PPI month over month came out forecasted at 0.4, but came out actually 0.5%, and unemployment rate was forecasted at 6.4% and actually came out 6.3. And once again, if you go to my YouTube channel and you click on Fundamental Simplified playlist, Everything that I just mentioned will be broken down so you could be able to understand this data. This is not that video where I'm going to explain every single thing, okay? So let's move forward. Now, when it comes to inflation, right, in the Eurozone, okay, there's two types of things, right? You have the core CPI and you have the core flash estimate CPI, right? Core CPI is what the ECB look at for policy decisions. So whether they do rate cuts, rate hikes, or pauses, okay? CPI flash is an early inflation signal. So it's like expectations of how inflation is going to be moving forward kind of thing, right? So if core CPI is elevating, that means the ECB has less room to ease. So if inflation is going up, then the European Central Bank cannot do rate cuts because inflation is going up, okay? So going back to this slide, right? The fact that, we have the core CPI come out lower than expected, and the estimate that they're for CPI and in the Eurozone is 2%. That means inflation, they're expecting inflation to continue to come down, and a good inflation number is around 2%. So that means Eurozone is actually starting to stabilize a little bit more, okay? So how I use this information as a trader, right? So my channel is particularly for swing and position traders. No shade to like scalpers or intraday traders, but I'll explain how you can use this information if you are those type of traders, okay? So the way that you can approach this as a swing and position trader is you trade the narratives, not the headlines, okay? Follow the data for confirmation and manage your risk properly. If you do those three things, you will be golden. I am not trading every single release, right? I'm just simply positioning myself and based on, the macro data that comes out, the macroeconomics on whether a country is either strengthening or breaking down or weakening, however you want to put it, okay? So as a scalper and as an intraday trader, for those who only hold their trades for a few minutes to a few hours, the way you can trade this, right? So say, for example, tomorrow we have NFP coming out. If, depending on the data that comes out tomorrow, that's going to have an effect on the DXY. It may spike up, it may spike down, or it might not do nothing. But if it does spike up, you can use that information and take it over to whatever you trade and get in for buys or sells. If it spikes down, you do the same thing. So if it spikes up, for example, and you trade EU, then to look for sales on EU because, based off that data in those moments, the US dollar has gained momentum to the upside. So that's going to cause EU to weaken compared to EU that's particularly weak. And in those moments, then you could be able to get in for a sell on EU and vice versa for any other pair you trade. So that's how you can actually capitalize or trade in these news releases. But for those who are in a position where they want to just swing and hold for months, weeks, quarters, days, whatever, you have to put all the pieces together, right? Because these are just puzzle pieces, right? And once you put all the pieces together, you will understand how a country is doing from a macro standpoint, right? So swing and position traders, we look at things, when we look at the charts, we're looking at it from the higher time frames, right? So from a macro viewpoint. So you do the same thing with fundamentals, okay? So pretty much this data is going to leave crumbs for me to be able to say, okay, this is how this country is doing. Okay, cool. This is how I want to position myself based on the pairs that I trade, right? So we're going to look at this information every single month, and we're going to determine how that country has done for the quarter, right? Because let me give you a quick example, and I'm going to wrap this video up, right? Let's say in January, unemployment rate for Canada comes out high, right? And then in February, it comes out lower. And then in March, it comes out lower, right? When you put those three numbers together, those three percentages together, and you get an average, that will overall show you, okay, for the first quarter of the year, the unemployment rate in Canada either went up or down, depending on the number. Okay, so this is what I mean by we look at it from a macro, not looking at it from every little piece. We got to put it together, got to put the crumbs together to make the cake. Pretty much is all I'm trying to say. All right. So if I helped you understand the bigger picture and you like this video, please subscribe. I said if you like this video, if I helped you understand and you gain some knowledge, like the video and subscribe, and I'll keep on breaking things down in a simplified way. And I'll see you guys in the next video. Peace.